Today's market call is presented by FactSet, financial data and analytics powered by Tomorrow, and SoFi. Get your money right, all in one app. Yo, ma. Swizzle back from Indianapolis. That's Carter Braxton Worth, very handsome man at parts unknown, as they say, although it appears as though you're in your apartment. Dan is still in France, Amanda. I don't know if that's doxing him or not, but you know what? What's the difference? I mean, who's going to know him over there? Anyhow, usually if it's Wednesday, it's Butters. No. If it's Thursday, it's Butters. So we're going to have a little JB. We're going to do that right off the top. Carter, how are you?
I'm good. Another day down at the, some people say down at the track, but it's.
Well, you know what?
Casino.
Why not? I mean, why not the track? I mean, because that's what, in a lot of ways, the market's turned into. And I don't want to make a huge deal out of anything anymore because we've seen stranger markets than we have currently. But we'll talk about this. Little intraday reversals we're seeing is worth mentioning. I think some of it has to do with this huge options expiration tomorrow, something that you know all too well about. But we'll get into it. But today, Amanda and I actually conversed prior to the show, and we try to put this rundown together. So let's throw that up, Amanda, and take a look. Now, some of you might see that and say, that's actually pretty clever. Carter's BC Energy. Of course, not to be confused with BD Energy. That's for another show and another time. As I mentioned, FactSet's earnings insight, the man, John Butters, that you all have come to love, and sell this, buy that, which sounds like a song lyric, but it is not. So before we get into anything all that meaningful, Carter, I figured why not? Let's take a look at the S&P chart because here we are again. So S&P continues to move, highlighted by the fact that NVIDIA continues to be the driver. NVIDIA's reversed a little, not a big deal. I don't want to get crazy here. You have more analysts seemingly raising their price target. The move in the S&P continues to be somewhat unabated. I'll say this, however. We did make an all-time high today, I believe, in the S&P 500 of 55.05. As we're sitting right here today, now it's 54.70. So I can do that math, about a 35 handle reversal. If this reversal continues into tomorrow, I mean, I think that's something that is interesting. But again, I don't want to get too far ahead of myself. So what is this saying to you, Dubs?
Yeah, I mean, look, there's so much continuing under the surface. There's so much love and there's so little fear. How to cope? There are no, whether it's Lilly, ultimately, there are no magic bullets. At some point, a securities analysis does conclude that a security, a stock, an index is full. The word expensive or cheap, those are sort of dirty words, but that it's drawn in a lot of money, a lot of participants, everyone's in agreement, and that but there are people putting out price targets, as you know, in NVIDIA, right? That's going to be a $5 trillion company, and that the market. But I had something here that I thought was, I'm going to try to read this.
Please.
Yeah, maybe this was worth. Okay. This is from a client. European client. They got about 420 billion under management. The Magnificent Eight, NVIDIA, Tesla, Avago, Microsoft, Apple, Amazon, Google, and Meta, closed at 16.9 trillion market cap, which is 59% of U.S. GDP and 16% of global GDP. They trade at 41 times trailing 12-month GAAP net income and a 1.6% free cash flow yield, excluding stock-based compensation. And they've paid out $100 billion in stock-based compensation in the last 12 months. If nominal GDP grows 5 to 6% in the next 3 years, and these stocks double in that time, they will trade at 100% of U.S. GDP and 25% of global GDP. The market is broken.
We have talked about. I'm so happy that person.
And then he concludes, "Congratulations, pal! You've created the greatest bubble ever seen."
Yeah, and I don't know. Again, he or she points that out, and we said earlier this week, and I've tried to bring to light what you just actually said in a much more elegant way than I have. But the first three stocks, Apple, Microsoft, and NVIDIA, are now slightly north of $10 trillion of market cap. And as you brought up, I mean, the U.S. GDP is just shy of $28 trillion. You can do that math. Global GDP, for those playing our home game, is about $108 trillion or thereabouts. So when you start looking at through the lens of just the global economy, it's actually somewhat mind-boggling. And then when you start to do the math associated with what you said about, nominal GDP growth and all those things, it's unsustainable. And I'll use that word by choice. It's absolutely unsustainable. And I will tell you, just, from, my background, the history lessons and some of the reading that I've done, the 77% margins that NVIDIA, for example, are enjoying now, they will not enjoy those margins in perpetuity. As a matter of fact, I read something about AMD. They will find competition. As Jeff Bezos says, or as I think he said, your margins are my opportunity. And it's just a matter of time. Pushback will be, Carter, look at the head start that they have. Absolutely. You know what? In today's world, those head starts, they get closed very quickly.
Yeah, I mean, the story of innovation is the story of this circumstance, but it also it ends when other people join and come in. So, for instance, if you looked at, forget the .com, the Nifty 50 era, right, was some of the highest valuations because these were brand new. Now, let's just think about the concept of what NVIDIA has created versus other semiconductors versus the following. So, we've created the picture. I'm sorry, what? Yeah, it's called Eastman Kodak. We can take an image of you. Wait a minute, my mother's about to die. There was no such thing as this. I could have a picture of her for all time. Or if I wanted to picture myself, I have to stare in the pond like Lion King. You created pictures? That was worth, Eastman Kodak was, how about this? Oh, so what do you do if you need to send a copy? Well, we have a bunch of monks and we rewrite the thing. Oh, we've got something called Xerox. How about that, buddy? We can make a document double. These were incredible innovations. The valuations were through the roof, just no different than NVIDIA. One day it all ends, and NVIDIA will be no exception. That's it.
And there are people throwing things at the screen right now. I understand that. And there are people like, Guy, you're an asshole. You've missed whatever the move is.
It's a body of work. There's always people. You know what, Guy, you know this too. Think about all the people that you started in the business with, both either on the sell side with you, which are in the trading desk, or clients. Once you're in it 32 years, as I've been, you've been, I'm talking about there's 8 to 10% of them left. Bombed out or whatever's happened. It's about a body of work over time. It's not about whether you caught NVIDIA or caught Eastman Kodak or short. It's having a rules-based approach to markets, period.
And, it's just interesting. I mean, again, this is completely just anecdotal, but I just got the elevator up here. And the first thing the guy in the elevator said to me is, what do you think of NVIDIA here? And it's become somewhat endemic, and I'm sure you get it all the time. And it's not, I want to be crystal effing clear. It's not an indictment of NVIDIA. I mean, it's clear what they have created is transformational. I would not argue that. I mean, but there have been a lot of, to your point, a lot of transformational companies that did extraordinarily well in their infancies, only to mature, like most things do, and then settle into a more reasonable valuation. There is nothing reasonable about the numbers that we just gave out in terms of market cap, U.S. GDP, and global GDP. It just doesn't add up, Carter Worth.
Yeah, I mean, you see it in anything. It's not just whether it's Eastman Kodak or a Xerox. It's like, oh, check this thing out. What is it? Well, what do you got? You got a candle? You got some whale oil? I got oil. My name's Rockefeller. I mean, there's always someone with something new. It persists for a long time. He was the richest guy in the world, of course. Now, don't have any money. It always changes. It's hard to time, but it's not about that. It's about the concept of what something being full is all about. Stock is full.
Now, listen, without question, typically we wait for John Butters until the end of this show, but we're going to do John Butters now. As you know, John Butters is the senior earnings analyst at FactSet. He provides us with a look-see into his work, and we've been fortunate to have it. You should get it in your inbox. If you're not, you're missing out. But this week, and there you go. That's how you get the earnings insight. Just join the community of insight readers. Dan is one. I'm one. I'm sure Carter is one. And I'm sure you're all one. But let's take a look at what he brought forth this week, because this speaks to something that you've done in your career and you're very familiar with, sort of the bottom-up price target for the S&P 500. And it effectively comes in just shy of 6,000, 5940 to be exact. That's an 8.5% increase over the next 12 months, which is, who knows? I mean, today's world, anything is possible. He also went on to say that analysts have overestimated the month-end closing price of the index by 3 to 4% on average over the last 15 years. So let's just stop there for a second, because this speaks to something that you talk about all the time. That side of the ledger, that, group of individuals, that's what they get. I mean, I hate to say it, but I mean, they get paid to be somewhat exuberant, and typically their exuberance is overstated. Thoughts on that?
Right. So if you go back even further, right, over the past 70 plus years, if you look at analyst revisions, they typically revise their earnings estimate down 1% a month because the new year starts out and you come in, hey, how's Christmas? How's New Year's or whatever it might be? And then what's your price target? And they put out things that are just too rosy because that's the human condition. Remember, it's called the sell side reason. They're there to sell stocks to support the investment bankers who bring stocks public. And so to that end, 5% of all stocks in the S&P 500 are sell rated, 5%. That's because no one puts a sell on. Even if their price target is below the prevailing price, they'll put it as a market perform, as a hold, even though they actually themselves have a price target that says the stock will go down in the next 12 months. And so it's the same. There's a general, whether you call it rose glass or not, or just the nature of the business is to put out estimates that are, whether believed or not, are basically too high. And then over time, it gets revised down.
Think about what you just said. 5%. Let's say it's not 5%. Let's double it. And by the way, your numbers are probably spot on. But let's just say, for example, 10% of analysts out there have sell ratings on stocks. I saw a statistic the other day, and I think it was correct. I tried to sort of fact check it, but I'm pretty sure it's correct. 75%, I think, of the S&P 500 stock or something crazy are actually trading in somewhat of a bear market. So they're actually wrong to have that few sell ratings. I mean, if you think about what's going on under the surface, the damage is absolutely being done. And we talk about it all the time. I mean, just being carried forth by these effectively three names. You want to throw another, I'm glad you brought up Broadcom because that's not an insignificant name, but a handful to 10 different names. And what people don't realize, I think, they look at the S&P, they assume everything's going well, yet the damage under the surface is significant, to your earlier point.
Very much so. And obviously, it can persist a long time as it has. But just as momentum, which we know is a very powerful force on the way up or on the way down, look at Walgreens Boots. It's going down and down and down. When momentum reverses, right, it also is equally powerful. You get these knee-jerk reactions, and that's what you see often in a heavily shorted stock that's just unrelenting and it's down. All of a sudden, it will pop 20% a day. And conversely, a love stock or currency commodity that's running. Look at cocoa, which just dropped 30% after having almost tripled, quadrupled over the past year. Momentum is a very powerful force that should be respected, needs to be respected. And when it stops, that is also something to be very aware of and to respect.
So this next slide is sort of the reason why we started with John is because we obviously have that great rundown. And just give me, no, I'm sorry. When I say next slide, I'm sorry, man. I meant the next side of John Butter's work. It's basically the S&P 500 sector. And if you look at just different sectors, what's expected, and energy is expected to see the largest price increase. Now, this is actually starting to make a little bit of sense to me because you have year-over-year comps and you have a lot of different things at work. But it makes sense that maybe energy, Carter, is going to start to get some love. So I look at this on John Butter's side and say, okay, this is starting to align with something that you're bringing forth as well. So let's just sort of drill down here for a second before we move on.
Sure. Obviously, what's so interesting is that this is the equal and opposite. The area of the market that's believed to have expected returns that are the most desirable is the thing that's the most depressed, energy, and the one that's expected here to have the least upside is the one that's most extended. And that's the nature of sort of skepticism. People saying, well, this tech thing can't go, and maybe that makes us all contrary and it'll go forever. And then in turn, value seen in energy, but that's what value traps are all about. So hard to know. But my own hunch is that one wants to embrace typically when something is, well, when something, what does the Buffett go, when all are fearful, time to be bold, and so forth. So I like energy as a contrarian play here.
Now, that goes back to, let's just put up the rundown slide one more time, because it might have, if you joined late, you might have missed this. So Carter's BC Energy. So anecdotally, and a little bit of a story tell here, I don't know if Bill Hockman is listening or not. Sometimes Bill sort of takes off, but my son came home one day with a robe on, Carter, indulge me for a second, and that he got from the Lost and Found at his school. Now his school is 600 boys, high school, so that's obviously ninth grade through senior year, and then another that's rounded out by seventh and eighth graders. So they're approximately, I don't know, maybe it's call it 520 high schoolers and another 65 or so seventh and eighth graders, just so we understand. All boys. Comes home with this robe. He didn't come home with a pair of khakis, came home with the robe. I say khakis because in a school of 600 boys, could be anybody's. But a robe that he had on, which was a very distinct robe, I mean, by definition, only one person in the school probably had it. So I turned to him and said, Guy, how do you wear that to school? Who's ever lost it, it's clear that, he will know that it's his and that you're wearing his robe. And he said, yeah, you know how I do that? I have BDE. And I looked at him and I said, I don't have no idea what you're talking about. He said, that's called big dick energy. And I'm like, I had never heard that expression before. And I actually use it from time to time. Sorry about that, Amanda and Carter. Anyhow, I thought it'd be clever to do BC energy, Carter's BC. That, of course, would be big chart energy.
There you
So
go.
with that, let's go to your worth charting energy slides.
Yeah, this was a piece put out about, June 2nd or 3rd, but I was trying to reiterate it recently, is that energy is at a critical juncture in terms of its relative performance to the overall market. So this is a relative strength chart, and let's flash to the next one. Let's flash again, well-defined levels. And if you pull this back even further, there's the short term. The green arrow is making the judgment that we bounce it, that energy starts to outperform. And one could say, is that because the market, which is all tech, underperforms? But look at this long-term chart, and look at the lines. Look at the arrows. If we put this in, I mean, this is an annoyance to the CFA Society, to the person, the geologist and seismologist who is studying energy, Chevron and Conoco and Hess and Exxon and Schlumberger, Halliburton. They're like, this can't be. How is it possible? Let's go back to the blue arrows. How is it possible that one thing divided by another, one sector, what are the parts that compose the whole, as depicted in a relative strength line, stops to the penny over and over and over? But listen, Mr. Jim Simons at Renaissance understood this, among other people. It's just about ones and zeros, whether you do it pictorially like this or actually through the math of it. Spending time with the relative performance charts is important, just as is with absolute charts. And we're at a juncture here where one wants to play by my work, right? One could say, to hell with your work. One's work suggests that energy should be short. It's going to be all electric cars. Carbon fuel will die. Okay, that's tomorrow's lunch. Right here and now, buy, sell, hold energy. I'm a buyer.
All right, so let's stop for a second and let's just dissect this. So that chart goes back to, I want to say 2001. Is that about correct? So the top end of that downtrend line has probably been in place for some 18 or so years. Is my math right, or am I off by a little?
And the key is also, Guy, where that is. If you look at the peak in relative performance, what was it? That was 2007 going into 2008, right? The market was already on its way down. We were getting into the 08-09 financial crisis lows. But what is defensive? Energy has always been defensive by nature of the Exxon and Chevron weighting in the, not only in the sector, but when it gets down to brass tacks and they say, well, what's book value? That's a very spurious thing. Well, we have some desks and chairs we could sell. I don't know, we got some extra toner. When you're talking about energy companies, you're talking about proven and probable reserves, right? Real assets. And so almost always at market wipeouts, energy has been defensive, or said differently, has exhibited relative performance.
Okay. Perfect setup for the following. So by definition, I would imagine the longer duration the line, the more important the line becomes. And that's a pretty long duration downtrend. You have this shorter term uptrend. So what's being created is this pennant formation. You're suggesting, and I agree with you, just so we know, that this will now resolve itself to the upside. And I think we have the next slide will suggest exactly that. My question to you is, if you are in fact correct, this goes back to something we've talked about for a while. And, I think that energy has basically fallen to the wayside and has been sort of left in the dust on the back of this whole semiconductor frenzy, AI frenzy. If that were to ever reverse, and you're obviously, again, you're just seeing signs of it today. I'm not suggesting we're on the precipice of anything, but if that were to reverse, energy will be the beneficiary. And if energy then becomes the beneficiary and we're able to break out of this, again, 17-year or so downtrend and get through this pennant, I would imagine that will be pretty powerful, again, given the duration of that downtrend line.
Well, that would be the thought, right? That it's taken so long in its underperformance, right? I mean, and it makes sense, right, during a bull market. But its low, of course, was a shocking moment of COVID. Right? I mean, you don't have a single car driving, no planes, nobody sitting around, and it was also kind of spring and summer going into March of so no heating. But basically, energy has outperformed since the COVID lows, and my thinking is that outperformance since essentially 2020 continues, and that it plays catch up. Remember, energy is only, as a sector, 3.6% of the S&P, right, down there with utilities and materials and real estate, the other small sectors.
I don't know what it was at its zenith, but I do remember a period of time where it was the high teens in terms of its importance to the S&P. So if you just think about that, and again, we're not saying it's going back to those levels, but perspective is important. I'll also mention this, and we might as well throw a crude chart up while we discuss. What's been interesting to me now for quite some time, and it started with the Chevron announcement of a $75 billion stock buyback a couple of Octobers ago. I believe that's when it was. That was number one. And then things started to happen. Then you started to hear about more M&A in the space. And we heard it as recently as Marathon Oil, symbol MRO, a week or so ago. Warren Buffett, again, continues to add to his Occidental Petroleum stake. I think he's in the low 30s in terms of percentage ownership, if not greater than that. And this is not a call on Occidental Petroleum. What I'm trying to point out is there are things happening in the energy sector, in the space, that people are taking notice of, but I don't think the market is fully embracing, which leads to us this next chart, which is the crude oil chart that we have up. And, again, I'll say this, you've done a masterful job. When crude troughed a couple weeks ago, you said now's probably the time to basically do the counter trade. The trade was upper left, lower right, be short of crude. And you said, that's over. This thing is going to reverse. It's reversed pretty quickly. And in a way, I don't think a lot of people, are paying attention to. And that's get completely wonky. But if you start to look at the curve, the energy curve, the crude oil curve, it's starting to get a little bit tight, which seasonality suggests it's a little early for that, which is also bullish. So, you'll probably say we're back to, parity in terms of where we should be. But I just think it's interesting, the bounce we've had in the crude sector.
Yeah, and remember, energy, again, they're just the parts that compose the whole. Energy has a weighting at only 3.6% of the total market cap of the S&P. Energy generates about 10.5% of the profits of the S&P. And so you've got to, and one could say, of course it does. That's what a value trap is. And you go into a major recession, but isn't it priced for that? That's the question. That's the hard part. I mean, isn't it? Who knows? But based on the charts, based on some of the relative strength charts, I want to be overweight energy if one is a long-only player. I want to be long-short energy versus the market if one's a long-short player.
You brought some, and we go back to the rundown in case anybody forgot. We also said buy this, sell that. It's like a song. Sell this, right? I don't know. But so there you go. So that's the rundown. So we did Carter's BC Energy. We've checked. So put a little check mark on that. I don't know if we can do that. FactSet's earning insight, check. Sell this, buy that. Well, let's go to Carter's chart and let's take a look at Costco. It's safe to say that this is, I don't want to sort of jump the gun here. So walk us through, Carter.
Well, the first thing you'd say is, hey, whatever those people do, they must be good at it, right? That is up and to the right,
Sure.
steady, orderly, godlike. Obviously, it has the sell-off in 2009, as all stocks do. But let's put some lines, and it's a perfectly mathematical channel. I didn't make the lines. They are what they are. Let's put some arrows in there. Get to the bottom, you get to the top, you get to the bottom, you get to the top, kind of like a pinball machine. So the stock drops 49%. during the financial crisis, just in line with the market. The market dropped about 52 or thereabouts. And so my thinking here, next chart, is that we're at the top of the channel and that we will give back some. I don't know if we have some other charts that might be on here, but if not, yeah, here's a comparative chart just to put this in context. Obviously, Costco has crushed the S&P since the absolute low of March 6, 2009, but it's also taking care of the technology sector. And then let's look at these charts. So you're talking about a PE of 54. Let's do the next one. You're talking about a price to sales ratio of 1.5. These are all all-time highs. Let's look at the next one. Price to book. Let's look at the next one. Price to EBITDA. And it's just charts. It's not about whether that's full or not full. They're extended. We might have one more. I don't remember. And then there's this, ironically. So that's a lot of people covering this stock. A lot of men and women whose economic livelihood and is dependent on, and that of their family or children or dogs, their partners, and then getting their work right. And these people, they're not just studying Costco for fun. They're studying Walmart and studying Kroger. They're studying, wow, Costco's selling gold bars now. What does that do to things? They're studying rents and margins and employee costs and wages. And Costco just got rid of American Express. Who's the credit card they're going to use now? Whatever, and on and above. How much is going for dental floss? People getting their eyes fixed at Costco. They buy plasmas. Doesn't matter. They're studying all of it. Same store sales comps. And this group of highly educated, that means, big universities, Harvard, Yale, Princeton, Stanford, Brown, Wharton, and then they went and got MBAs, and then they have CPAs, and then they went and studied these damn things, and collectively as a group, they think the stock is worth less in a year than it is now. What? I mean, or what the hell? I mean, the point is, I don't know, you tell me. I would say it's full.
Well, I'll say this, and if you can go back to that, some of the charts, and again, price to earnings, all those metrics are now sort of parabolic in terms of their moves, but let's look at just the Costco chart itself, and you will see that along the way, on this lower left, upper right, you have seen pullbacks. As a matter of fact, we recently saw one on the back of earnings. They're typically somewhat shallow, they're typically somewhat short-lived, but they absolutely happen. So, I think Carter's spot on in addressing the fact that we're now on the upper end of this upward channel. Doesn't suggest that the channel is broken in any way, but it does suggest that within the channel, we're probably going to have a pullback. And then you layer on top of that the fact that those metrics that we just looked at, all the price to earnings, price to sales, all those different price to book are extended in a major way. So, as Costco's going higher, what's effectively happening is it's just got more expensive. So it historically has grown into its valuation, but now what you're seeing is it's sort of outgrowing its earnings and valuation, which I think should be concerning. So I think you're doing a great job with that one and identifying it.
Yeah, and interesting. One could be listening here and saying, "Oh, those two, they're saying you should short Costco. They're going to buy puts. It's going to expire." Well, listen, only 2% of all stocks are sold short. The broad thrust of America, the big endowments and synagogues and churches and museums and universities, it's long. Now, most people are long. If you're long, at a minimum, trim a little bit, sell a call, take some measures. Now, you want to get more nuance, put on a risk reversal, or put a small short on, or big short. That's it. But first objective is to decide, is a stock full? Is it maybe expensive? Has it discounted what's coming in the next 3 to 6 months? We can't discount out 2 years. That's a dream. That's a myth. And people who give you their price target for 2026, where our first response has always been, you know what's going to happen in 2026? You might want to keep that to yourself. It's pretty valuable. It's idiocy. Okay. So working backwards from the idiots, just trim a little bit of your stock if you're long Costco.
Right. Or say to yourself, okay, Carter's probably onto something. Guy brings up some interesting points. Now let's understand why Costco would make a move to the downside and what could potentially be happening in order for that to happen, and maybe what's going on with the rest of the REIT. So we bring these forth not to be necessarily specific, although in this case it's very specific, but then you can say, okay, let's think this through a little bit. What could be happening along the way to get this stock lower? By the way, we said sell this, buy that. Here's my buy that, and Carter's probably going to hate this, but throw up Macy's. And the reason why I like sort of Macy's here is if you look, we've had some moves to the upside, and it typically is on the back of whatever acquisition news is out at the time. 23.5 to 25 is seemingly the price that gets thrown around in terms of an acquisition price. and the stock spikes, and then it gives it all back. We have found, I at least have found, this sort of 18-ish level, and you can draw a bit of a horizontal line. That's a static chart. We can do a real-time chart. This has been support a couple different times. So, in a world where if people start to cycle out of some of these high valuation names, but they want to stay in retail in a very odd way, a name like Macy's could be the beneficiary. And oh, by the way, you have the added kicker of potentially some pretty positive headlines in the form of things we talk about all the time: acquisition, M&A, going private, whatever the hell it is. So there you go, Carter. You don't need to necessarily opine, but I do like Macy's at these levels.
Yeah, I mean, the stock doubles 11.21 and spent a lot of time resting, consolidating, sort of working off the overbought condition. A little bit of a jump off from here, pair of twos. Does it pop to 21? Does it sink there to 17? And but I get the thought.
We have a question from Mordecai Cohen. I like that. That's a great name, by the
That
way.
is a great name.
I dig that. Update on silver SLV. I will tell you, I just had a conversation with one of my friends earlier today about silver, and I don't think it's over at all. I think that the ranges now have gotten much larger in terms of silver. I mean, that silver was trading, in 25-cent ranges, maybe. Now it's moving in dollars at a time. And I think, to me, that suggests we're getting ready for the next leg higher. Again, I'm not saying I'm right, but I think, to me, Mordecai, I don't think silver's done by any stretch. Carter, thoughts?
Again, great name, great photo. I think I saw there on the bottom, but 100% long and strong. Silver, buy when you can. Make sure you're present. Higher for me.
I agree. Wavy McFly is with us every day. Thank you, Wavy. Although I question your folks naming you Wavy, but maybe it's a family name. Guy and Carter, can you explain how indexing benefits a few stocks over the many and creates skews in the markets? Well, I'll take a stab at this, and I'll say, again, I'm going to sound like a hater. It's not intended to be a hater, but as passive investing has sort of become de rigueur, as the French say, over the last decade or so, as long as money flows in, money doesn't care about all the bullshit that I talk about. Money doesn't care about anything. Money just needs to find a home, and it finds a home in some of these names. For example, NVIDIA is now, I believe, in 417 ETFs, of which it's one of the top 15 holdings. So as indexing becomes important as well, and passive money flows into these indexes, these stocks win regardless. And it creates this sort of winners and losers. And the winners are the ones that are in most of them, and the losers are the ones that are sort of tossed aside. I don't know if I explained that well, Carter, but do you have thoughts?
Yeah, I'm not so much on the creating skew in the market as defined in an option sense, but it's about money flow, and it's about forcing behavior to some extent, right? Benchmarking is an important part of the business, and and the big money is institutional money. Of course, when big institutions, long-only mutual funds and family offices, hedge funds are benchmarked, they have to play chess with the benchmark, right? It's a navigational thing. And so when an individual security starts to take on outsized sort of shape and form and weighting in an aggregate, it forces behavior that would otherwise not necessarily happen. And so, for instance, let's use this example, when Apple has forever has been such a big weighting, it was an anathema. I have a lot of clients speak of it because they'll have a cap on what they can own. They can't have any more than 3% in the portfolio in one stock. And yet they're benchmarked the S&P, and the S&P's got Apple at 6. So they're perennial like, oh my God, I can't cope with this because I can't get properly weighted against the benchmark, which is a very rare thing. Of course, most stocks you can do that by virtue of the fact that our mandate won't let us get more than 3% in one stock, which is a heavy concentration. That's for risk management purposes. And yet the very thing I'm trying to play chess against has no mandate. Apple 7, Apple could be 10, putting them in a perpetual disadvantage.
Yeah, it is interesting. Scott A., and this is the last one because I want to be respectful of Carter's time. What does Carter think of Albemarle? I believe, if I'm not mistaken, ALB probably made another 52-week low today. I say that because seemingly, if we put up a chart up Albemarle, which is it's a lovely place in Virginia, by the way, it only seems to make new 52 lows each day. And this is, at its core, and I think what's going on here, bit of a lithium play. So, I guess, Scott, the question is, if you do a longer-term chart, you'll see Albemarle had a huge move to the upside, only to give the entire move back, and there you go. That's illustrative of exactly that. I mean, I don't have a sense when this downturn is going to stop. What was support has seemingly now been broken. But I think this is becoming a bit of a binary play here, Carter.
Yeah, I mean, it's all very symmetrical, the way up, the way down. Now, hard to know when does it end, but in principle, as a general rule, don't buy stocks in downtrends, right? And so you want it to base and bottom, hasn't done that. Now, there are ways to, I bet you could sell, for instance, a put. If you said, I'm willing to buy the stock, that's what go till cancels order are, right? A limit order that you've left out. But instead of just having it sit there and not pay you, you can sell a put naked. Most people won't do it, but you could say, I'm going to sell the 90s out for October. I'm willing to buy the stock at 90 and I'll get paid to do it. That kind of thing. It's just it's no different than you put in a good till cancel limit order below the market, but you're getting paid at least while nothing happens. But at some point, barring bankruptcy, yes, you'll have to get some sort of bounce.
Yeah,
as to when, hard to.
That's an actually, and I never really thought of it that way. I mean, it's an interesting way to look at it. You're getting paid by virtue of the fact that you sold an option to effectively have a limit order at a level you might want to buy. I mean,
Exactly.
there's subtleties around it, but it's a pretty interesting way to put it. So, as always, I'm not only one of the participants in this show, but I'm often find myself being a viewer as well, and I learned something. So I learned from you, Carter Braxton Worth.
And we had a good time doing it.
We didn't mention Market Matrix today, although I'm sure Amanda has the slide if she wants to throw it up. You can take a look at this. Next week on Monday will be our 5th week doing the Market Matrix. That's our AI generated podcast. It comes out after the close each day, 4 o'clock, anywhere from 5 to 10 minutes. And if you miss something during the day, you will get cleaned up and you'll get caught up with I believe we call this Brunson. That's Dan. That's not me, although I do sort of dig it. So check that out. And if you want trades in your inbox, Amanda, I know you have this slide. Why don't you throw that sucker up, or Jacob can continue to tee me up. But trade ideas are there. You go. Sign up today. riskreversal.com. Why, Carter? Why wouldn't you?
Why wouldn't you?
I will say this again. I don't know what today is going to want. Again, a lot can happen today. Keep an eye on these reversals, which continue to be interesting. Individual stock reversals as well as the broader market. The VIX had this early spike seemingly out of nowhere. I think some of it may have to do with what we're waiting for tomorrow in terms of the expiration. However, it's something to note for sure. Carter Braxton Worth, appreciate your time as always, sir.
Likewise.
See you guys later.